Howdy, everybody. Brian here from quantlabs.net. Today, I want to go through a posting that I posted on my posting site because posting is fun. Anyways, this is a query put out by somebody who sent me a pile of links last night, and I want to go through these, make a video out of these. I think these are important. Okay, so this is regarding stop losses, take profit. We're going to talk about stop hunting and what's currently been going on in the crypto markets for the last couple of weeks, even a month. And let's get to that right now. So right now, he sent me this link from a company called Agimut Trading System. This is built around some modified RSI. Now, I just did my analysis from last night. It's a neural net. It may work, it may not. It's very cheap for Forex. It's an EA, expert advisor for MetaTrader. It may work, it may not work. So my response to that is here. Does this actually work? Did you get decent results? There was also a mention of a VPS, virtual private service that you get. Virtual private server. There's a tutorial. Does that work? So on and so forth. Another article here. Now I'm going to show you what I've been working on. Now this one is before I forget, for anyone on the podcast, I'm working off of my article here, quantlabs.net/blog. Articles called Stop Loss and Take Profit versus Tight Range Bound Market. This could be applied to pretty well. Well, Forex is always a tight bound range market unless you got to use crazy ass leverage to get any kind of return out of that. And then you got crypto as well, cryptocurrency. So there's this article here called quant-investing.com. Truths nobody about stop losses that nobody wants to believe. This appears to be written for newbies. So there's all these studies done on what best strategy is to use, trailing stop, different types of stop losses. So that's all fine and good. So my response is here. Okay, I've been wearing this for a couple of years. I mean, this is really hard to do. Stop losses work absolutely. Depends upon on what you're going to set your percent for the stop loss will be. Some here are saying 5%, 10%. When you hit a tight range bound market, chances are whatever pair you're going to watch and put an entry on, chances are that that position won't even reach your 5% stop loss. Maybe not on your 5% on the downside as well. So from my experience, I usually set 1%, and if it's really tight, and from what most highly experienced market making type of traders will tell you, you want to set it at around 0.5%. So this is what I said. Because of that, those are very hard markets to trade in. This is what crypto's been going through for the last month. And I've discovered this new thing called AOP. Let me just see if I can find it. Let me just do DuckDuckGo here. And AOP. And I've been testing different indicators. So I can't remember what it stands for, but just look up AOP. And it sort of works. Technical indicator. It's kind of like a moving average, but a technical indicator. Let's see if I can find it. AOP. Anyway, so we'll leave it at that. Well, I got it from from Motivwave. It's a study on their AOP study, so maybe it might be in there. Yeah. Okay. I'm just gonna say that for now. All right. So continuing along. Um, so I'm using this thing. I've got another one called Mama, and these are all available in TALib, Technical Analysis Library, if you've been using the Python course. RSI is still consistent. So I'm using more of an oscillator. That seems to somewhat work, and especially on something like Bitcoin because it's such a big, a high-priced asset, but yet those moves, the percent moves, can be big, really big, and you can make some good money with that, no matter on the position sizing you take. Uh, so what I want to do, and really, it's very similar to trailing stops, but this is the difference. The logic is this: you have an oscillator, you get in to ride the trend. So you set your entry potentially when you hit an RSI of, let's say, from what I'm seeing, if it's really like on a bid ask level, I'm finding if you set your RSI and it's really tight range bound, you can get some little bit of profit on around 55 on the RSI, because most of the time when you're in a tight range bound, it's going to be between 48 to 53. But yet you may get some activity when it hits around 55. So you can ride that little bit of a trend. When the AOP drops to negative, it's basically showing you a sign of weakness. Just get out, and that's it. And the problem here, using any stop loss, trailing stop, or whatever, take profit, as I said, when you hit these market conditions, chances are you won't hit that profit level, and your position will be stuck in that range bound price action, and it's not going to go anywhere. So if you treat it like an oscillator, and you're going to get a slight trend when the RSI hits as low as 55, chances are you may see a slight trend that you can ride it out. And using some kind of metric to show the weakness, just get out once you start seeing weakness. And I say that because probability always tells you once you start seeing weakness, probability, if you hang on to the position too long, it will go negative, meaning you'll lose money. The chances of hanging on to a position with it weakening a little bit and then moving up further to take even more profit, the probability is much lower of that. So it's just better to get out of the market when you start to see first signs of weakness in that position. And what you can happen is, if it does weaken, that means the RSI will drop off to back to the 50 or lower, and then you can just wait it out until that trend starts to pick up again at 55. So you're kind of like optimizing your profit potential, even though it's smaller amount, but yet you're not taking the chance, the probability of it for it to ride up. The only time then that happens when the market conditions allow it, like when you have very strong market conditions. Now, this also depends upon your time frame, and this is the tough part that a lot of people have. Because if you're trading in the world of crypto, another factor you got to consider is liquidity / volume. So, for instance, if you get an unknown crypto pair against, say, Bitcoin or even USDT, chances are it will trend, it will move up, but then what will happen is when you follow even this methodology, you will get potentially a whipsaw and it'll just suddenly drop. And that drop can happen literally in seconds because it's not strong enough in terms of volume or liquidity. But there are times where you will get a no-name coin where the trend is so strong it will be sustainable for a while. It could be an hour, it could be 2, 3 hours. But if you hit the trend early enough, you can definitely follow this methodology. But on the other hand, it's better to only track the most highest volume, most liquid pairs. So if you were to go on a Binance, look for the most, or CoinMarketCap will tell you this, and do a search for the most or highest volume pairs over 24 hours, chances are you will, and I've been testing this, you will see Bitcoin number one, Ethereum number two. So this could work for number two, for those two, for sure, because they move up and down enough, and there's enough liquidity to keep the price stable, and it won't drop off very quickly unless, and usually there's no market impact from a news source for that to drop off so quickly. I've not seen it yet, but when you're dealing with the other coins, the alternative coins, it can happen. But yet on the other hand, you get other coins like Bitcoin, Ethereum, very stable, but then you get Tezos, Chainlink that are performing really well, even more than Bitcoin Cash, which is kind of unusual. Ripple has not been doing too good lately, or XRP. So those two other coins I mentioned, Tezos and blockchain, may work, but again, that's long-term trend. It could be a week, couple of weeks, couple of months, and they're decent coins to work off of. But you got to keep your eyes on those coins based upon that 24-hour volume to see if the pairs are stable enough to follow this logic of these oscillating methodology. But you're better off for now, from a safety point of view, just focus on Bitcoin and Ethereum. And yes, you may get certain coins that may outperform, but that may be very short-lived. Now, there's something else people have been asking me about, this quant investing. If you look at Join today, I like this business model, and I think this is good. You get a screener. In my case, I could offer trading signals, and it's pretty cheap. I don't know what it is. What was it? Just the price? Yeah, 40 euros. And then you have a newsletter, which I could add on as a separate service, which I do. And that newsletter could include deep analysis of all kinds of things I'm very capable of doing. So I'm planning to do that as a business model. I kind of like that. All right, let's continue along here. Investo. Okay, so this is Investopedia, stop loss. That's pretty obvious. But the thing here about 5% past support for stop hunting is good. So if you set not 1%, 2%, 5%, it's good. But here's the problem of that a lot of people don't talk about or consider. So just go to this link here. So there's this article here, and it talks about the various oh boy, looks like I kind of, there's a way to get around that. Just if you are watching, boom, boom, proxy server with this browser, I can get around this quite easily. Boom. And here you get your proxies, or sorry, your VPN built into this browser called Epic. And you got the different countries that you can pretend to be in. If it's US, Singapore, Canada, whatever, Europe, India, whatever. So we'll accept that. But you can see here. Oh, it didn't work. That's rare. Anyways, sorry about that. What you can consider here is that this article talks about 5%, 10%, 2%, whatever the position should be set at, or the percent should be set at for your stop loss take profit. It the point is you can set it to whatever you want, but there's going to be scenarios that a lot of people don't really know. A lot of people don't talk about. And what happens is you will get big whale traders, which are kind of market makers. What they'll do is they'll participate in an exchange or a broker, and what they'll do is they'll pretend they can move certain instruments. Okay, so what they'll do is they'll move the profit level, and they can control it. And then what they'll do is you have a bunch of participants, automated or human based, that will watch that price. Price moves up, ATR gets hit, boom, everybody's okay. And sometimes these whale traders will control that and will put and do these stop losses and take profit manipulation 2-3 times continuously before they want to move the market to a big up move. And what they're doing is that they'll control that price, control the stop loss and all that, and be able to fake out all the weak participants in the market or in that broker exchange, and be able to fake out participants. So when somebody sees a stop loss, they get out, and it happens again, they get out, and there's going to shake out quite a few of those participants. So once the market maker or the whale trader knows that, then they'll move up the price because they have less participants following that price because they shook them out. And that's something that a lot of blogs and all these I just don't talk about at all. And that's what whale traders do, especially with what I'm seeing being on the bid-ask level or tick level with Binance. I'm seeing a lot of that, but I'm seeing more the price is not moving at all because, as I said, the RSI is only between, let's say, 48, 47 to around 53. So the price is not moving. But once our RSI hits around 55 at the tick level, it seems to move it a little bit, but not much. So you have to have some experience there to be able to say when can your entry be. And sometimes you have to take into consideration that sometimes, and that's one of the other big advantages following only the top coins like Bitcoin and Ethereum. A lot of these whale traders cannot really move either coin because they're so big. You look at Bitcoin just on Binance alone, it's $3 billion being traded every day. So it's pretty hard to manipulate that. It's pretty hard to manipulate that unless the exchange is doing it, which can happen, or the exchange is pumping out fake bid asks to shake out the market. I don't know if any of the exchanges do that. A lot of them do. I don't know if Binance does that or not. There's accusations that they do. But yeah, those coins are too big to manipulate from what I'm seeing. But when you're dealing with number 3, number 4, like Tezos, Chainlink, Bitcoin Cash, they're about $90 million a day. And large whale traders that are $250 million that participate in exchange, and there's quite a few of them that do, can manipulate those smaller coins. So you got to be aware of that, and they will fake you out unless you get your hands on to the committed trades, the actual executed trades, which that data is out there in the futures market that I still need to experiment with. And again, of all the exchanges in the world, all the types of asset classes, unless you're willing to pay to play like on the CME, you won't have access to that information. But with Binance, you kind of do. If that makes sense. So that was a long answer. Sorry about that. What are the best trailing stop strategies? Let me see here. So let's see if this one's open. So again, we have here all these mumbo jumbo talk about, so you can set 3%, 5%. There was another one for 7%. But what this article and things like this, and they talk about all the different strategies, they're not, including ATR, they're not considering what happens, as I said, to the market market conditions are so tight, range bound, that they never get to the 3%. They never get to that 5%. They never get to that 7%. So I'm saying if you are going to use stop loss, you have to set it to as low as 0.5%, and kind of do a scalping method, especially in this kind of market. Otherwise, you're not going to make money because the markets are too tight to even move the price. That's just the way it's been for the last month, let's say, with Bitcoin. It makes the market conditions very hard. So I talk about this here. It depends again on your strategy as well. And then in the same article here, they talk about towards the bottom, they have a table here, I believe, on the ATR multiplier, on the average true range multiplier here. What I say about that is what you can happen is there's the worry of the stop loss. If it's too long, you could get prematurely kicked out, but yet you're still missing out on the trend. I mentioned that earlier already, where if you follow as with like an oscillator, you will get smaller profit moves, and that means they will be smaller, but there'll be more of them. So you're not really missing out if the you get booted out because you set your stop loss or take profit too tight. And if you do make it too big, as in 3, 5, or 7%, chances are you will lose money either because the price never gets to that level, or if you wait too, like it may hit at 1%, it may hit at 2%, maybe, let's say, but you're waiting to take profit at 3%, 5%, 7%. Yet you've missed all that chances of getting profit, but yet you're waiting out for a profit potential that may never happen because the markets are not strong enough. They don't have the trend's not there to make it happen. So it's better to have a smaller, tighter take profit percent, and take more little profits instead of these bigger, massive potential profit if the market trend's not there. And when you're in a tight range-bound market, as I said, chances are you won't hit those levels. Now, this person offered some GitHub coding resources. There's one for Coinbase. I've got this already in place, like things like this already in place. It works for Binance. These are very similar to what I have, so both of these are very similar to what I already have. But again, that's assuming that there's trend in the market, and right now there isn't trend in the market at all, at least in Binance or crypto. So hopefully this video will answer a lot of these questions and make reference to these links and these systems and whatever else, because I'm just basing it upon my own experience. Not here to refute what people are saying, but they're not considering what happens when the markets go really tight and there's no price moves. You can make money in the market, but you gotta kind of look at it more from an oscillating level, and that's what I'm experimenting with right now with that. But really only focusing on Bitcoin, because Bitcoin is a really good coin for that, because it's so big and it's so priced at a level. One factor I forgot to mention is people will say about these tight stop loss percent levels, they'll go on about, well, you got slippage, you got commission rates that you got to factor in. Yeah, that's true. And that's why I'm on Binance, because the commission rates are so tiny that if you get at least a 0.1% move on your take profit, anything above that is break even, because the commission rate is 1/10 of the profit, so it's 0.1%. So if you achieve that and go, let's say, even as tight as 0.25%, you could still make money at 0.15% when you take out the 0.1% commission rate. So it really depends on the exchange itself. Whereas opposed if you take that same methodology on Coinbase, who's charging 0.5% for each trade, it won't work because the commission rate is too high. So you have to really, really, really factor in two things. This is why I like Binance, because the commission rates are so low, and there's a lot of coin selection, as well as the volumes there. And from what I'm seeing, they don't really manipulate the markets from what I'm seeing. So we'll leave it at that. And let me just see. I might have a message pertaining to this, so give me a minute here. Okay, so we're leaving it at that, and we'll talk later. Have a good day.